Well, howdy there, folks. Welcome into today's video. A lot to get into in this one here today. 4 core subjects I need to cover. Small caps are rolling heavy right now. Are these going to continue to roll heavy? For how long? For how high are they going to go? A lot to get into in regards to that. I want to share my perspective and opinion on how far we have to go there, okay? Second subject we're going to cover here is consumer going into holidays. Obviously, everybody's now starting to focus on holiday season. It's Thanksgiving week, right? Talk about the consumer in this holiday season as well as the first quarter of 2024 and share my perspectives and opinions on what we're looking at. Like there, I sold out of a stock completely. I'm out of it 100%. I sold it off completely. We're going to talk about what stock that is, why I made that decision, and lastly, we'll talk about where that money went. Clearly, I think there's some better opportunities in that particular stock, and so we'll speak about that in today's video. I appreciate every single person for being here. Thank you for being subscribed, folks. Yeah, 2 things to get through before we get into all this here. First is we are only 3 days, 7 hours away from the massive sale for the Black Friday deal. $62, you get access to my Become a Master Stock Market course, plus see the positions I'm buying and selling in the Patreon portfolio, as well as see exactly how I diversify portfolio. Plus, you actually get Discord chat access to that Discord in there as well. 3 days away, folks. You need access to that. That's pinned comment down there. When you go through the course curriculum, so many valuable videos in there, but many of them, I can tell you a lot of you guys need these videos right here. Valuing stocks. Trying to figure out if you're getting ripped off on a stock, if you're getting a good price on a stock, those sorts of things. Those videos are going to help you guys out immensely in that course curriculum. Second thing is, the second pinned comment I'll have down there is NVIDIA earnings are tomorrow. We're going to have a massive 3-hour live stream on Twitch tomorrow. So if you want to join me for that, see my live reaction, I'm going to listen to the conference call live on there and all that good stuff. Then check out the second pinned comment down there. Make sure you follow me and you have notifications on there, okay? All right, guys, so let's get into this. You know, looking at the small caps, they're rolling, man. These babies are rolling day after day after day. My top 5 stocks I could really find today that I own, guess what? Honest, Revolve, Foot Locker. Yeah, Palantir's in there, and we'll talk about Palantir in just a moment as well. Fubo, right? Small caps. Look at the moves these stocks have made. This is just this month. This is this month's performance. You have Revolve up over 10%. You have Foot Locker up over 12%. You have Fubo up 38%, and you have Honest up 42 flipping flapjack in percent this month. The small caps are rolling. We'll get into how long this is going to last for and how high these stocks are going to go in just a moment. But you know something else I'm seeing out there? Something very interesting, and that is stocks like Meta continue to climb. Although the smalls are moving, and they're moving aggressively, and they're now starting to beat a lot of these big techs, the big techs are moving as well, which means there's still a big buying appetite for these sorts of stocks. Meta today hits a 52-week high, literally today, right? I mean, that stock's up another $8,900 here today. We're pushing very close to $400,000 gain now on the stock. We're up $395,000 in profits on this one. Palantir continues to move, right? I mean, this stock was up another 4% here today, up $4,700. We're $69,000 in the green now in Palantir. And you got to ask yourself, who's buying Palantir? Because I think that's a fair question. Like, who's buying it right now, right? The stock has gone up so much. Do you think people would be pulling back on buying, if anything? And yet you see the stock up 4% here today, right? You got to ask yourself, who's buying? Well, is it retail? Is it the mom and pops buying Palantir left and right here today? I don't think so. I think a lot of retail has already built the positions, and a lot of the commentary I'm hearing out of a lot of the retail community is actually more cautionary right now. So I actually don't think this move up here, I mean, the market cap's exploded for Palantir. It's a $44 billion market cap now at this point in time. And when I look at the market cap and I think, you know, how much buying pressure would need to come in the real retail side to really get the stock to move, I don't think so. And there's no like massive new news in regards to Palantir either, right? I mean, we think about earnings, we think about all that stuff that happened, like, it's tremendous. So I don't think it's retail buying. So then you got to ask yourself, is it Wall Street buying? I'm not so convinced it's necessarily Wall Street as well. They could be buying a little bit. Let's say Wall Street has maybe a little intel on, you know, kind of Palantir's business model and maybe what's going on underneath it right now. And maybe there's a potential that some of these earlier stage hedge funds and Wall Street folks maybe believe that there's a high probability that Palantir could come in and smoke the analysts' projections for next year, which will obviously usually be a big catalyst for the stock to move up for the mid-stage and late stage. So it's a potential. Obviously, S&P 500 inclusion is looking more and more realistic. So that's something Wall Street likes to look at because Wall Street's always looking for arbitrage anywhere, right? Wall Street's not just focused on the fundamentals. It'd be cool if they were, the forward Ps and the price to sales metrics and all that stuff. But Wall Street is usually looking for these little arbitrage opportunities. And you look at a stock like Palantir, whenever the day comes and it's announced that, they're going to the S&P 500, there's probably going to be a significant move up in the stock price, probably, right? There's probably going to be a lot of buying momentum after that. And so there's a very decent chance at least that Wall Street's saying, I got a position in this one now. Maybe S&P 500 inclusion comes 3 months from now, 6 months from now, 9 months from now, who knows, but position into it now. Company has a lot of momentum in general. Plus, whenever the S&P 500, you can get another move upward to maybe $25, $30, something like that. So that could be potential. But what I think is actually buying Palantir right now? You know who? Palantir. I think Palantir is buying Palantir stock heavy right now. That is just my little hunch out there. We're in a period where Palantir can buy shares right now. They should be able to buy shares and buy shares aggressively. They announced this $1 billion buyback kind of toward the end of the summer, right? And so I'm looking out there and I'm saying, I wouldn't be surprised if Palantir has really got a change in the business model for the better, right? AIP, getting that sales cycle from 6 months, 12 months to maybe days or weeks. If this is a true fundamental change going on in the business model, right, and their numbers are going to be phenomenal for 2024 and in future years, it's very possible Alex Karp and the team says, damn it, we got to buy every freaking share in sight right now. We need to buy every share in sight. And so it's very possible that the biggest buyer of Palantir right now is actually Palantir. And if you talk about, they're consistently buying with tons of money, and then obviously you have a certain amount of Wall Streeters also buying, right? Because they're excited about S&P 500 possibility of inclusion and then potential beats on numbers. That could be what's going on there, okay? Now, to take it back to small caps, right? How long will these small caps run for and how high will they go? Well, here's my opinion, okay? Small caps will run all the way until one of 3 scenarios happen. One is some sort of black swan event that no one sees coming that just is crazy, okay? That could always end the small cap run. The second thing is, if there was ever a situation where the Fed, people believe the Fed's going to go a lot higher in rates and they're not done raising rates, okay? How realistic are both these scenarios? Not very probable at all. The chances of Fed's going to go higher on rates, extremely unlikely, and obviously some crazy epic black swan event, those are very few and far between. Rona was one of those, right? Those don't happen very often. They are extremely rare. So these two aren't even very realistic, right? And so the third component is when the recession is actually confirmed. It can't just be talk about recession anymore. And everybody's heard recession talk for 2 years now at this point in time. They're sick of it. The bottom line is to get anybody to sell small caps or not buy small caps now, you're going to have it be confirmed. It's here, massive job losses, unemployment rate flying to the moon, all those sorts of things. And that's not very realistic, at least in the short term. We could talk about longer term, that might be a possibility, but in the short term, it doesn't seem very realistic, okay? So the bottom line is smalls have quite a way to run here because these 3 things just aren't looking super realistic, right? Now, the second component is how high will these stocks go? And I can tell you, they have so high to run, okay? This is the last 5 years looking at the Russell versus the S&P 500 versus the Qs, okay? Now, usually, the Russell should be somewhere in regards to the S&P 500 over a 5-year span. Usually, it should maybe underperform slightly, overperform slightly. Usually, it's not going to do as well as the Qs for the most part on a 5-year basis, but, it should be somewhere in there roughly. We have this insane divergence. The Russell's up 20% in the past 5 years. S&P 500 is up over 70%, and the Qs are up over 145%. There is a long way where small caps have to catch up here, okay? Now, you might say, you sure about this whole, they usually in line with S&P 500? Let me show you the previous 5-year period and then 5 years before that. Get ready to have your flapjacks flipped. Here it is, okay? This shows you 2013 through 2018, right? And what did we find? The Russell was right in line with the S&P 500. It underperformed the Qs overall, but it was right in line with S&P 500. Let's go back to a previous 5 years. And how did this do? This is 08 through 2013. S&P 500 up 5% during that time, right? Obviously, we had the great financial crisis, so that screwed up stock prices for several years, right? S&P 500 was only up 5%. The Russell was up 21%, and the Qs were up 36% during that time period, right? So this just goes to show you that the Russell has an unbelievable catch-up to do. And it's, going to be one for the ages. That's all I'll say about that. One for the flip and flapjack and ages. Now, on top of that, if we think about valuations, right? Really, it's been about 2 years now that small cap valuations have been on the floor, among the lowest we've seen in the past 25 years or so. And it's been like this for 2 years now, right? Now, by the way, mid caps are trading very undervalued as well. Large cap, not so much. Large caps are very fairly valued, even at the higher ranges of fair value. But massive catch up, because I can tell you these don't stay low forever. They just don't. Small caps aren't going to stay down at these sorts of forward Ps forever. It's unrealistic. It's actually pretty unrealistic that they've already stayed down here for about 2 years. That's extremely rare. For them to be down here for this long of a period, massive catch up to do. And so the way I would kind of look at the smalls is, I'm sure you guys have looked at the ocean before, and you look out to that ocean and it's just so vast and it just seems like it goes forever and ever and ever. And I look at the Russell right now and I just see one of those sorts of situations where it's just like, damn, there's so long to run here. Like, this is not going to be some, 1 month move and that's it. Like, this is a long move over years, multi-years of catch up the Russell will do overall. It's not like this is like, oh, it's just this month and that's it. Like, this is years of catch up. It's going to catch up to where it needs to get to, which is roughly in line with the S&P 500. It's a long damn way to go, ladies and gentlemen. Let's just put it that way, okay? Alrighty, next subject up here. Consumers heading into holidays in the first quarter of 2024 and how are we looking here, okay? So, first off, this shows you the United States, Michigan consumer sentiment over time, right? Shows you basically the past 13 years, the past 10 years. And prior to Rona, we were at great consumer sentiment. Consumer sentiment was phenomenal. And it was actually phenomenal for years, many years. Consumer sentiment was in a very good place. Now, consumer sentiment is in the dumpers going into this Christmas, okay? I'll just call it what it is. It's horrible. It's in the sewer. It's absolutely in the sewer. This is awful. Awful, okay? So that doesn't bode well for the consumer overall, but some food for thought here is the consumer sentiment has not in a good place for years, and spending's actually still been pretty damn impressive for the last years. So if you think like consumer sentiment, it's what dictates necessarily if people spend, it actually doesn't. It's an important economic factor. It's important overall, but I mean, consumer sentiment wasn't that great back in this range, and there was people spending like crazy, like look at the restaurants. Go to a restaurant on Saturday night, try to get in, it's like, it's busy, right? No, personal savings rate, another problem. There's another problem we have for this holiday season. I mean, we're at 3.4% personal savings rate. That's extremely, extremely low. But keep this in mind. This can stay low for years. So the 5% number is kind of the range. Like if you want to talk about you're in a really healthy spot, you want to be over 5%. Okay. And so we were, coming out of the great financial crisis, we were actually over 5% for years going into that. And then we kind of, we're roughly in the range, and then boom, another big pickup here all the way up until we got to Rona, right? And here, by the way, these huge spikes was because everything was shut down. We had the stimulus and everything like that. But the important thing to remember is, if you look back at this time period, 2005, 2006, 2007, prior to the great financial crisis, we were insanely low when it came to personal savings rate for years. So this is something that's very intriguing, because if you think like, oh, this can only stay low for a little bit and then massive recession, it can't. It can stay low for years. And then it's probably going to eventually catch up with you, right? But it took 3 years. It took 3 years of personal savings rates being super low to finally like, whoa, there's the big recession it hits, right? And by 08, 09, everybody's well aware of that. So personal savings doesn't look good going into this holiday season. Sentiment doesn't look good sentiment looks like garbage going into this holiday season. Personal savings rate looks like garbage going into this holiday season, right? So overall, I would say it's not going to be an exciting holiday season. It's not going to be some banger when it comes to numbers. Not at all, right? No, it's very possible that in the first quarter of 2024, right, inflation is not going to be an issue. Inflation is going to likely be in the 2s the entire first quarter of 2024, right? We're going to see a pretty significant pickup on real wages in the first quarter, and consumer confidence will likely pick up in the first quarter as well, which likely means earnings will be good. So 2024, I would say a much more, optimistic on in terms of consumer spending, all those sorts of things than this year, certainly, okay? So overall, I would say I think we're kind of in for an okay consumer environment for this next few months. And there's a very decent probability that we could see a major pickup in consumer sentiment in 2024 overall. Real wages, folks, are so important. And real wages have now started to go positive again. And I think there's going to be a huge increase in real wages likely in 2024 because the unemployment rate is still so low. Companies have to pay up for workers. They still do. Until the employment market breaks and all of a sudden, you're at a 4 or 5% employment number, companies have to pay up for workers. So workers are going to make much more next year, but inflation's not going to be there next year. Housing, autos, rents, any of the major components, commodities are down in the past year. So I think real wages are going to be in a really good place for 2024, and it's going to create a very confusing economy where you could see an actual real strengthening of the consumer and the economy and confidence, right? Which obviously there's a certain political party that really needs that significantly if they want to try to win next year. Let's just call it that, okay? Now, next up, I sold out of a stock completely, okay? What stock is this? Why did I do it? And then we'll get into where that money went. Where did I put that money from there, okay? So the stock I sold out of completely is Corsair Gaming, CRSR. Sold it all. Dumped it, okay? Now, first off, do I think CRSR is necessarily a bad stock to be in over the next few years? I don't think so. I think it'll do fine over the next few years. I look at it like this, okay? The company's disappointed me and disappointed me and disappointed me and disappointed me, and I'm like, how many damn disappointments can I take? That's the way I look at it. Like, I've already been disappointed too much in the stock over the past few years. I mean, if we look at how many times they've missed or just met expectations, which, by the way, meeting expectations is pretty much a miss as well, okay, on EPS. Like, good companies beat their earnings. Look at this. Miss, in line. We might as well call those misses as well, okay? So the company's just disappointed so many damn times over the last few years, and it's like, how much more am I going to put up with in regards to these misses, right? If I look at valuation, obviously Corsair is a hardware company, so it's trading at about 16.5 times 2024 numbers, which is, I think, a pretty fair valuation, potentially overvalued. Usually you kind of expect for these sorts of companies like a 12 forward P because it's a hardware company. It's not a software company. Software companies will command a much bigger valuation, which is why, like Apple, for instance, commands a much bigger valuation nowadays, and in terms of a forward P and trailing 12-month P than it did years ago. Because now people look at it more as a software company than a hardware company, right? So it's not like the valuation's like so cheap that I'm like, oh my gosh, it's on the floor, right? Next thing I kind of look at it in regards to is there's a lot of stocks that are fighting for my money. And there's a finite amount of money to go around, right? And so if my money's invested in a Corsair, then that means it's not invested into other stocks that maybe don't come through with so many disappointments over time. And maybe they're the type of companies that beat earnings quarter in and quarter out. Instead of missing earnings are barely coming in line, they're like the type of companies that beat and make us shareholders happy every time they report. Versus like, is this company going to miss, or are they going to barely beat or barely make it, right? That's not a fun thing to do. There's a lot of stocks calling for my name all the flip and flapjack in time. And, a great lesson I think I learned from the chef was, the chef disappointed so many times and I just stuck with it. At the end of the day, like, if you have a company that just keeps disappointing you, you got to move on from that, right? It's just, time to cut it and time to move on, right? And finally, I learned my lesson with the chef, and I finally cut that one. And then sure enough, they ended up going under, a few months later or something. And by the way, Corsair is a very different company than the chef. Like, Corsair is night and day better than the chef. It's just the premise of the whole situation is if there's a company that keeps disappointing and you own that company, eventually you have to move on and say, there's a lot of better stocks out there for me to find, right? It's no different than I look at it as like, your boyfriend is treating you super bad, or your girlfriend's treating you super bad, and cheating on you, whatever is the situation, right? A lot of people think they're stuck with whatever they got. There's plenty of fish in the sea, right? There's 7 billion plus people on this planet. Like, you can find somebody else. And in the stock market, there's thousands of stocks. We can find other opportunities. And the golden childs are out there. The golden eggs are out there when it comes to stocks. The golden eggs are out there to get. Oh, this is beautiful. That won't treat you bad. And you'll do phenomenal with over time, and you don't have to constantly worry about, oh gosh, are they going to miss numbers again? Oh, are they going to disappoint me again? Oh, are they going to disappoint me again? Because, eventually you just have to say, hell with this. Like, there's better opportunities for me out there, right? You can fool me, but let's move on from that whole game, right? So that's kind of where I was at with Corsair Gaming, and that's why I decided to cut it. But once again, I don't think it's a bad company. I just think it's a very meh company. Ultimately, that just, has disappointed too many times. And there's better opportunities for the money, which gets into my next thing we're going to talk about here. Where did I put the money? Okay, so let's talk about this. There's several places I actually put the money. Several places, okay? First stock up here is Target. So I put $15,500 into Target stock. This is a new buy for me in the public account. Target, brand new buy for me in the public account. I have already owned some Target shares in a different portfolio that I added, over the past few months when it really went down significantly. This is a starter position in the public account. If I think about the positions in the public account, there are companies that I have faith will do great for years to go in the future, and I can add to those shares over time and feel very comfortable. And I think Target's one of those companies. They were obviously really disappointed their investor base this year. I don't think they're going to disappoint their investor base in 2024 and in future years. And they're historically been a company that just, if anything, they delight their shareholder base year after year after year. And I think they're going to get back there. And so I'm kind of a new shareholder getting in regards to Target here. And I'm looking at it and I'm saying, I've got to, build out this position. I really like it in the public account. I think they've done a hell of a job over the years. Not this year, but if I look at Target over the past 10 to 15 years, they've done a hell of a job running that company. And I also look at their bottom line. I mean, their bottom line increase on a year-over-year basis for their net income and their earnings per share was startlingly good. And so I think about it like this context. Target's going to get their revenues back in the positive direction, probably in 2024. When Target gets those revenues back in the right direction, they start growing revenue again, their bottom line is going to grow so rapidly because of the changes they made in regards to their bottom line and getting things back in the right direction. So I'm just looking at Target and I'm like, this is a super low PE stock that I think has phenomenal growth going in the future. And I think there's a real opportunity. So I said, let me go ahead and add that baby. Okay. And I've got a while to buy Target, by the way. PayPal, added more shares of PayPal, nearly $10,000 more of PayPal stock I added. PayPal, I mean, I've spoke about it so much recently. I just think it's the best risk reward in the stock market right now. For an individual stock, I can't find a better risk reward in the stock market right now than PayPal. I can't. Nothing. When I think about like, what are the chances I lose 50% on the stock over the next, 3 years versus make, a double up over the next 3 years? Like, I can't find anything better. It's the best I've seen since Meta. PayPal, Venmo, Braintree side of their business, Alex Chris coming in, like, I'll take my chances when I'm buying a company at a forward P of like 11. When they have bottom line growth in recent quarters of like, double digits, when they have double digit bottom line growth and then they have like 8% revenue growth over the last few quarters, and I'm paying like a forward P of like 11 for that company, and they got a new management team coming in that, is pretty darn impressive, I'll take the risk reward on that. If PayPal's at a 35 forward P right now, I probably don't take that risk. But at 11 forward P, give me it. I also hedged a little bit more. Obviously, I need to have hedges for next year just in case the big recession hits and it all goes boom, 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 okay? Which is always a potential. And so I have many hedges on in the public account. One of them is Toll Brothers, so I add a little more to my Toll Brothers hedge there. And, the way I kind of think about that is, let's say there's a scenario where the stock market tanks for whatever reason, okay? In the summertime next year, something like that, okay? It would be likely, using an example of where the stock market tanks in the summer, I would probably sell out of that like in the fall time. All my hedges probably. In the fall time, winter time, go ahead and cash out of those. Because almost all my hedges in that portfolio, and pretty much all my hedges in general, they all expire around the end of 2024 or the beginning of 2025. And so at that moment, I go ahead, move out of those hedge positions, and probably with huge profits, and then go ahead and funnel that money straight into, I would say, whatever the most beaten down dog stocks are that I love at that particular time. We'll just put it like that, okay? So definitely like that. Now, with some more stocks I bought with that money overall. Well, I bought some Cheesecake Factory shares. Not too much. It was just like another $1,000 of Cheesecake Factory. And I bought another $720 of Amazon shares overall. Amazon is the third biggest position in the public account. Cheesecake Factory is still a smallish position in the public account. I want to continue to build out that one overall to a much bigger position. I love what they got going on with not just Cheesecake Factory brand, but the entire FRC concepts, North Italia. I think there's just a long runway of growth for Cheesecake Factory and just a lot of profits to be made there. And now that inflation's out of the way for Cheesecake Factory, that bodes very well for them because now they don't have to worry about the insane rate of increase of wages, because that was out of control there for a bit of playing catch up, right? And they also don't have to worry about the insane amount of food costs that was hitting them all simultaneously, right? Where the price of a tomato was jumping huge and all, pasta and everything, eggs, everything was just off the charts. They don't have to deal with that anymore, and so I think that's going to bode very well for their profitability numbers over this next many quarters here. Now, if we talk about a consumer that also strengthens in 2024, that's another leg higher for Cheesecake overall, and it's just a very cheap valuation there, right? And we all know I love Amazon, so yeah, I don't need to speak about that one. So the way I kind of look at it is, in the public account, I got to build my Avengers, my Avengers team. And I got my Metas, and I got my Elfs, and I got my Tesla, and PayPal, and Palantir, and Amazon. And so it's just building an Avengers team. And I look at it something like Corsair, and I say, is this company really an Avenger type stock? Have they really been performing good enough to be an Avenger? And it hasn't. It hasn't. If you look at since that company's been a public company, they've been pretty disappointing over time. They've been a pretty big disappointment, so I can't say they are. But there's a lot of damn stocks out there that do belong in the Avengers, which is the public account. And so that's kind of my views on that, right? So always tough decisions to make in regards to that, but got to always have your money in the best potentials possible, the best risk rewards possible. So appreciate y'all joining me as always. Thanks so much for being here, folks. Don't forget, Black Friday sale. We are now 3 days, 5 hours away from the massive sale that is pinned comment down there. You need access to that. I can tell you that much. That is going to be a whole smoke. There's no joke as deal. The fact that you get this course, access to this course, and you can run through all that, it'll probably take you 3 or 4 weeks to run through all that, realistically. Some people, if you're a speed watcher, you might be able to run through it in a matter of a few days, but take your time when you go through that course, folks, because I'm telling you, those videos, some of them are very in-depth, and, make sure you're giving your undivided attention. That's what I'll say about that, okay? So pin comment down there to enter in for that, and that's a one-day sale. We'll send it over on this coming Friday. You'll have access to it. The deal will be good till midnight, and then that will be that. And then the deal will no longer be good. Much love, and have a great day.